Welcome back to the newsroom. Our business editor Owen Fairclough is here with the opening numbers on the markets.
Good morning, Rebecca. It looks and feels like a midsummer market at the moment. All of the European exchanges opening around 1/3% down. Carlsberg, their share price just off by around 3%, with investors taking a few profits after some very, very good results. Rebecca will have those in a moment. Those are the numbers on the European markets. Let's just put up the Asian markets board as well. Again, pretty flat days trading all around, with the Nikkei closing at 0.1% down. The Hang Seng also off by around 1% or so. You can see just the Kospi managing to scratch out a few gains this Wednesday.
As I mentioned, a few more business headlines for you now. Carlsberg has posted a 63% rise in profits thanks to booming sales in Russia, its largest market. The Danish brewer's profits for the second quarter were up to 450 million euros. Sponsorship of Euro 2012 helped drive overall growth, while market in Russia increased to 37%.
Greece is asked for an extra 2 years to pass key reforms outlined in its bailout programme. According to the Financial Times, the Prime Minister will try to negotiate a new timetable. That's when he meets the leaders of France and Germany next week. The EU and IMF have frequently threatened to suspend billions of euros in bail to Greece unless the government speeds up cutbacks.
EasyJet is warning of potential disruption for passengers flying from France to Portugal over the next 5 days. Around half of the airline's 250 pilots based at Paris's 2 main airports are on strike over the 5 days in a dispute over wage rises. EasyJet says so far none of the 160 flights leaving and arriving in France this Wednesday are affected, but it is urging passengers travelling to Faro and Porto in Portugal to check with the company for updates.
Now, Standard Chartered's share prices recovered by around 5% this Wednesday. That's after the bank agreed to settle for $350 million, allegations that it helped launder billions of dollars on behalf of the Iranian government. It's a scandal that's shocked and distressed the share price of what was considered one of banking's steadiest ships, but the bank considers it a small price to pay for an affair that's changed its reputation potentially forever.
Standard Chartered may have avoided an embarrassing public showdown, but it hasn't been let off scot-free. Barely 24 hours before the British bank was due to attend a hearing with the New York Department of Financial Services, the regulator announced a surprise settlement of $340 million. The deal also includes the installation of a monitor for at least 2 years to evaluate money laundering controls at the bank's New York branch. Last week, New York's DFS stunned the bank by accusing it of being a rogue institution. It claimed Standard Chartered schemed to hide 60,000 transactions with Iran worth some $250 billion, money which might have been used to fund the country's nuclear program. The bank has admitted that some of its transactions did break US sanctions, but said the amount totaled just $14 million. Although the cash settlement may appear steep, it's far from the worst-case scenario for the bank. The DFS has questioned whether it should be allowed to keep its banking licence, raising the spectre of being cut out of a major market. However, while the agreement settles New York state accusations, it doesn't end a long-running federal probe into the bank. And the greatest cost for Standard Chartered won't be the money settlement, but the damage to its once impeccable reputation.
So as we saw there, Rebecca, investors have certainly put their thumbs up to that, and it's given the share price a little bit of breathing space. But as we heard in that report, there are other ongoing investigations. The Federal Reserve, for example, and 1 or 2 other US agencies are still looking into the books at Standard Chartered.
So not quite a closed case yet.
Not quite.
Many thanks to you, our business editor, Owen Fairclough. Owen is back on Thursday. We will see you then. Bye-bye.